Welcome, lovely ladies and gents, to this live session recording. We're kicking it off with Harris. Harris has a question. Harris, go ahead.
Hi, it's my first time joining a live session. I've been with you now, I believe, 2 months on the close friends group. And so before I first started, I think I would say that I was about 50% profitable. So I was hitting my profit normally like 1 to 2s, 1 to 3s, but I was also taking losses quite often as well. And then I started with, I want to say mid-Jan, 7th of Jan was when I first purchased your course. I went through your YouTube videos, and I built that £600 account up to now £8,500. So it's doing pretty well. But I just want to keep building it up until I can start doubling accounts, because I think it's a pretty good way to go about it, is to double it, pull it
So
out.
you've taken £600 to £8,000?
Yeah, over 2
Yep.
months.
Over 2 months. Dude, those are such fucking rookie numbers. Why is it not to 80K yet?
I'm not. I don't think for me anyway. I think one of the main stumbling blocks of psychology is just the amount that I'm risking. Sometimes used to play a big part, and then now I'm getting a bit more and more used to it. So it's just becoming a little bit easier to risk that amount and not basically get crumbled by the pressure. But yeah, I'm just looking to build that up to about 20K, and then as you do, double pull out, double pull out. So I just want to say thanks. I see your trading strats have helped a lot. And then also the major part that I've noticed the most about anyway is the losses. Even the losses that I'm taking, more often than not, they're a lot closer to break even than I risk 5% a trade, but a 5% loss with the hedging. So it does help out quite a lot. So thanks for that. And my question was with regards to, I think, GA, Pound Oz. You closed, I believe, on yesterday. You closed out, obviously, with the hedged position. I just wanted to know your view on where you think GA is going, because there's a lot of like a geopolitical turmoil, and I just didn't know. I see my background would be like using fibs and stuff like that, and I kind of scrapped all that to kind of learn your way. So it's kind of, which has helped a lot. I just don't know what you think is the step going forward.
Yeah. So I was not hedged on GA, just to be clear. Did you say I was hedged?
No. I just think you closed out on GA.
Yeah.
And I just wanted to know, we'll see what your review is on GA going forward.
It's because I'm a bitch. I mean, it's because I was just going geopolitical economic events, pound strength. I'm just fucking with you, bro. I was heavy. I was heavy net short. I was in 3 positions. I was in a short up here, a short down here in the break of the lows. Then when it pulled back, I enter a short, and it was not moving. It was like it tried to go down, push back up, close another pin bar, tried to push up, close with the red candle, and then started doing this little one candle at a time, slow push to the upside. Normally, if price is going to go down, it'll just like reject the area where it's going to make the lower high, and it'll just go down. I was feeling sort of sketched out. It would do that. And then on top of that, my net basket of trades was around break even, I think. Profit, loss, and then one in the middle at break even. So I was like, you know what? Am I going to hold this shit, roll the dice on gap, spreads, commission, swap fees, everything going up? Or can I just liquidate here? And then if next week price ends up pushing back to the zone, I'll just get back in with like a big dick position size right there at the resistance. And if it pushes up to my original plan, which was like to add like a degenerate, if it gets all the way into the tip top of the resistance zone where that alert is, and I'll go ahead and adjust it right here all the way to the tip top. Then my original plan was to go in heavy at this zone, because this is a fucking weekly area where it's super likely to bounce. And then I'll have my entries better instead of all stacked down here when it's just not having the momentum to move. So the reason I closed was just because I thought it was starting to look kind of sketchy. It pulled back. If it was going to go, it should have just dropped straight from there. It shouldn't be this little sideways shit where it's like you enter, tries to go down, keeps failing, starts trying to make higher lows, having these little green candles start creeping upwards. Normally what that means is it's going to lurch upwards. Sure, it could just touch the resistance again, bounce, or come deep in here and bounce again. I just didn't want to roll the dice over the weekend of being in a triple position, like 3 times my initial risk on a trade that's just kind of fucking going sideways. So I closed because it was consolidating. Does this make sense or no?
Yeah, no, yeah, that's fine. I understand. I just wanted to understand why you did it. But yeah, that's it. Question done.
Mate, you're doing bloody brilliant, mate. You've got a £600 account. In 2 months, you've grown to 8 grand, and then you're going to grow your account to 10K, 15K, 20K. The only question is you're going to treat me to a beer when I come out there to UK?
That was a pretty trash British accent, mate.
Thank you. Yeah.
But maybe it depends. I'm from up north, so likelihood is if you ever come to the UK, you probably come down south to London or something. But yeah, if you do manage to find your way coming up north sometime, yeah, I'll treat you out.
Okay, perfect, man. Yeah, make sure you save up some of those profits to, take care of your boy when I go up there to UK. It was great meeting you, great chatting with you, great results. But honestly, man, only $8,000 in 2 months. I think you could do better. But I'm just being a dick. But you're doing very good. Continue learning.
No worries, thank you.
All right, cheers, mate. Mark, go ahead. You're next. Microphone's muted. Microphone's muted, Mark. Unmute your microphone.
All right, let's try that again. What's going on?
What's going on?
Trying to get out of my comfort zone here, put the video on and everything so I can see you guys, or actually you can see me. But no, I do have a question for you, and I can totally relate to Quan that just spoke. I'm almost doing the exact same thing he is, and I'm getting the exact same results. And you're right, it always comes out to be like 50 to 60%. Always. Like, I don't know if it's like the laws of physics or whatever, but that just seems to be like the number, or it might go up to 60 and then it'll go down to 55% win rate. And I'm doing 1-to-1 paper trades. I've got about 40 underneath my belt right now. I don't use real money. I don't use the demo account. I just go on to TradingView. Yeah, I shared a little bit about this with you before, but and what I'm wondering is, if I'm only breaking like 55% win rate after so many trades, what if I change the risk reward to 2-to-1 instead of 1-to-1? Wouldn't I make more profit?
So the answer
Possibly.
is it depends.
Yeah. And I won't really know until I do this for 2 or 3 or 4 weeks and get that data. It's not something I can assume, right? I have to actually get the data and know for sure if that's going to be a fact or not.
Correct. No assumptions, no bullshit, only objective reality and evidence-based data and decisions and contextual analysis to help guide you. Now, the reason I told you it depends is for two things. Number one, usually when people start increasing that risk to reward ratio, normally win rate slightly takes a hit and it goes down. So you may have a 40% win rate. Now, look, you can still be profitable having a 1-to-2, 1-to-3, but you're just going to have more you're going to have more of a pain in the ass because your win streaks will be bigger, especially if you're using stops. Now, another thing, which is why I like hedging, is that if you use hedging and dollar cost averaging, just adding to losers at the next zones, if you use that contextually appropriate in a contextually appropriate way, it doesn't ever fucking matter what your win rate is, because whenever you finally do get a winner, the entire net basket of trades comes back 90 to 95% of the time. For me personally, not financial advice, it all comes back to a net break even or a profit. So if you think to yourself, Mark, you're like, even with a shitty win rate, even if you sucking at everything in life, including trading, even if your wife and kids have left you and disowned you and you're just alone in your house, just doing nothing else, if you just manage your trades in an appropriate way, it doesn't even matter if you're right or wrong, you still make money. And you've seen this through my hedging videos and things like that. And I'll place this contextually for you and saying, what you're doing right now is perfect. Just get the data. It does not matter. Just do the 1-to-1 thing, let it happen. And then what you can do is, as you're collecting this data, after you close the trade, you can go back, you set an alert on that pair. If it would have gone to like a 1-to-2 or whatever, set the alert there. And then if it would have gone there to the 1-to-2, you can go grab that screenshot and you can throw that into your spreadsheet as well in like maybe a third column. So you have your entry, you have your exit, and then you have what would have happened if I would have targeted like a 1-to-3. For example, my client Andre, who's now funded like $1.5 million.
Yes, that's where I got inspired by it. Yeah, but go ahead. Yeah, I saw his video and I'm like, that was incredible.
This fucking bastard, man, he's doing better than me, honestly, like, because he's using stop losses still and he barely does anything. He's like busy with college and doing like piano lessons, and he works for the Texas Tollway Authority he's doing all this shit, but he's making like roughly 10 to 20 grand a month and that's funded, that's with profit share and everything after everything. And what he's doing is he tracked the data as to what would have occurred had he tightened the stop and increased the profit target and waited for a better entry at the zone and then just ignored everything else. He tracked what would have been this outcome. What would a 1 to 2? What would a 1 to 3 be? What would a larger stop be? What would a tighter stop be? What he found with his metrics is anywhere between a 30 to 40% win rate with a 1 to 2.5 for him personally. After a data set of 500 to I think it was like 550 trades, he showed me his whole spreadsheet on our last one-on-one call. It's fucking insane. He tracked all this data and just found for him 1 to 2.5 risk reward works good with an entry deep into the zone and a tight stop. For him, that works. What will work for you, Mark? Literally anything can fucking work. It doesn't matter. All you have to do is find the data and let the data dictate what you're doing. Does this make sense so far?
Yeah, it does.
Okay,
Don't compare myself. I saw his 1 point or 2.5 ratio as well, and I got really inspired by that. But you're right. That might work for him based on his trading style and his personality, but that doesn't mean necessarily I'm going to get the same results as he did. So
that is correct. That's why I tell people everything works. Doesn't matter. You don't have to be a genius. Paul, I'm putting a link in the chat for any of y'all who are wondering who this bastard Andre is. He was failing for 4 years, bought my compounding course sometime at the end of last year. And within like a month or two, he was already getting consistent. He's continued to book one-on-one sessions with me up until this day. I think we've done like 5 one-on-one sessions. He's paid for 4 additional sessions. And he's just a degenerate bastard when it comes to tracking his trade, meticulously everything. You'll see in that video, he tracks it. So that's the first thing. So I'm glad we got that out of the way. Continue tracking your trades, Mark. The second thing I wanted to highlight here is the beauty of hedging and then dollar cost averaging at the next zone. Once you get a baseline for entering trades, meaning I'm drawing the damn support resistance zone, I'm waiting for price to get there, and then if it gets there, I'm taking a trade. You're just getting that simplified shit right first. And once you've got that down, you kind of have like an average win rate, an average this like risk reward, if it goes this way or that way. What you can start doing is you can start implementing like a different risk structure, because keep in mind, most people who are following my trading, 95% of them, they're using support resistance as the only technical analysis tool. And then they're using either stop loss and certain risk rewards, or they're using hedging and dollar cost averaging contextually appropriate. And so here's the reason why, even if I'm only have a 50% win rate, honestly, even if I have a 40% win rate, here's why I'll still make money. Now, you probably already know this, Mark, but just for the sake of the conversation and also for the sake of everybody else watching this video, I'm just going to go over it. If you use a stop loss, here's what your outcome is with a 50-50. You have your entry, you have your stop, and then price goes either up or it goes down. It's probably not going to go sideways forever. So this is what your trades normally look like. They'll hit your entry, and then if you do not manage the trade at all and you do nothing, it's either going to go up to your up to your target area or down to your stop area. You will roughly have a 50% win rate. Now, a lot of you are probably wondering, like, what the fuck? Why would I even bother doing that if it's only 50%? I got to be right 60, 70, 80, 90% of the time. Here's the reason. It's because no matter what you do, no matter what your stupid, idiotic reasons for entering a trade are, no matter how you justify it or what you say yourself, the story you tell yourself about why it's going to go up or down, the market is simply going to fucking go up or it's going to go down. There is one of two outcomes. It goes up with you or it goes down against you, or vice versa if you're in a short position. It goes up or down. It's 50-50. So this is why it doesn't matter what the entry is. This is why technical analysis has zero predictive power. Technical analysis is only useful as a form of risk management. Now, here's what happens if you approach it with a different view as far as risk management is concerned. Instead of saying, I'm going to buy here, and if it goes down, I'm going to be stopped out and I'm wrong, and it's going to go up, I'm going to be in profit. If you know that you're going to win 1 out of every 2 trades just because of sheer statistical random chance, just arbitrary random chance, here's what you can do. You can buy at the support zone. If you have let's say a final invalidation below here, what this means is this is how you're going to calculate your lot size. So if you think price is going to come to this zone and it's going to move up, then you enter a trade here. You would calculate this distance as what you would normally do a stop loss. So if you want to risk, let's say $1,000 on this trade, it's 333 pips. You go and throw that into a position size calculator. This is taught in the Close Friends lecture content, as well as the compounding course and obviously full program. If you're here, it's taught in all my products. You just calculate this in the risk calculator. 80 JPY, 346 pip risk, and I'm risking $1,000. You throw all that into the calculator, it'll give you a lot size. Let's say it's 0.69, for example. So you enter a 0.69 lot size right here. If it bounces up, once it gets to about a 1-to-1, you can just start to look to close it out. So if it gets to like a 1-to-1, or if you just wait for the next zone where you think price is likely to bounce at, whatever your reasons are, right? You can close it whenever you want. Usually I wait for at least about a 1-to-1 in most cases. I don't always get that, but it's usually I kind of want to go for at least as much profit as of what I'm risking. Now, that's if you're right. Now, that'll happen half the time without you doing fucking anything. You could be a complete idiot, just set alerts at major zones, and as price gets there, you just immediately enter, and you've already pre-planned all this. This is barely doing anything. You will be right half the time without having to obsess over the news, over this and that, smart money, liquidity concepts, institutional candles, all this bullshit. You will literally be a 50% right and 50% wrong if you just do this. Now, how do you profit from having a 50% win rate using hedging and dollar cost averaging? Here's an example. What happens if it breaks through this zone? Oh shit. So we got to look at it this way. Technical analysis dictates that price might bounce somewhere at certain zones if it gets there. And if you've drawn really clear areas where prices had huge bounces in the past over and over, then you have areas where prices likely maybe to bounce again in the future. Nothing is guaranteed, nothing's 100%, but you have likely areas where prices bounced in the past that you can use in the future to help say, you know what, price bounced really hard here in the past, everyone bought here for some reason, maybe it'll happen again in the future. And you'll be right roughly 50% of the time. So if it doesn't bounce on your first entry, it'll go down here into drawdown. If it breaks the zone, you can hedge. Hedging is entering an equal and opposite position. So if you're in a 0.69 lot size buy right here, well, if it breaks the zone, fuck it. You get into a 0.69 lot size sell. Then after that, you have a new set of outcomes. You are hedged right here. And this is maybe only whatever, $300 loss. If your original risk was all the way down here at 1,000, you're hedged at a $300 loss. Here's what you could do. It's broken the zone. You've gotten hedged. One of two things happen. What happens, Mark? Tell me what happens from here.
Well, I'm sorry, I'm at a loss here.
Okay, cool. So I'll make it even simpler just so we can all get the point across. Whenever you enter a trade, what is price going to do? It's going to do one of two things. What's it going to do?
Yeah, it's going to go towards your take profit or against it to your stop loss. Yeah.
Sweet. So essentially, yeah, it's going to just go up or down. That's all it's going to do. So
Right.
once you're hedged and you're in a new basket of trades, so you've entered a buy, you're hedged at a sell, it's either going to come back up to retest the support resistance zone that it just broke. Then what you can do is you can just close the buy at break even and leave the sell. Then if it bounces, you have a profitable outcome. Now, what if that doesn't happen? What if it doesn't come to test at all and it just comes down here into the next support zone? Well, it's no problem. You close your sell and profit. Then you can add a buy in drawdown because you literally think it's going to bounce there because it is the next zone. And you have an invalidation below for both entries because you'll have two buys, one buy and one buy here, one buy here. So you have two sells and like two hedges down there in case it breaks. And then if it bounces here, if you just let it go halfway and you close both of these at break even, you've had a profitable scenario. And your win rate was 50%. Because you lost this first scenario here, you were wrong. So you were wrong one time, but the second time, you know, it happened to bounce right there, and that'll happen most of the time. It'll bounce at the second or third zone. So that is why, even though I'm wrong like half the time and I'm only right half the time, by just using appropriate risk management, using hedging and dollar cost averaging, it doesn't even matter if you're right or wrong because you can still make a profit. So that is why, Mark, continue doing what you're doing, get the data, figure out how to just enter trades and initiate them. But then after you start to get the data, you can implement just simplified hedging and simplified dollar cost averaging to start managing your trades when you are wrong. So half your trades will be super easy. There'll be no pain in the ass. They'll just go straight to the target. The other half the trades, you'll hedge to the next zone, close the hedge, add it the next zone. Then when it finally bounces, even if it's the second or third time, when it finally does bounce, you'll break even on everything you were wrong about, and you have all those profits from all the hedges. So you made money even though you were wrong. That's why I like that, because even with a 50% win rate, you still make money. So that was to give extreme context and extreme nuanced detail on you saying like, fuck, it's frustrating because I get a 50 to 60% win rate. How am I going to make money? What do I got to do to change it? And my simplified answer was essentially just saying it doesn't even matter if you have a 50% win rate because you could still make money if you implement the appropriate risk structure. I know I said a lot, but does this sort of make sense?
Yes, it does. Can I confirm exactly what you just said?
Yeah, say it in your own words.
Yeah. So basically what you're saying is that it doesn't matter if I'm doing, or if I'm doing stop loss trading or I'm doing hedging, I'm still going to end up with that 50%. However, now, instead of taking or having that loss, losing money from that loss, I'll basically just break even, but it's still considered, it's not considered a win still, but then my win rate is still the same at 50%. So I'm not taking a big hit in terms of money or cash. I'm just kind of breaking even, so it kind of evens out to be the same. But in the long run, I could end up being more profitable.
Yeah, you'll be
Yeah.
able to, when people ask you, what's your win rate? You'll say my win rate's 50%, but I make a profit 95% of the time. And they'll be like, what the fuck? And then you'll have to explain to them all the shit that I just spent the past 10 minutes explaining, and people will be fucking mind blown. Like, I thought it was just you enter, and if you're wrong, you lose money, and if you're right, you make money. Well, it's like, yeah, but if you structure everything accordingly and like size your positions appropriately, have your invalidation zone far enough, wait for the next zones, you have a clear plan for the management of the trade, if it even goes into drawdown at all, because you usually don't even have to do that half the time. The other half the time, it just bounces easily and you liquidate and profit, and you'll have extreme win streaks like that. And honestly, bro, what you'll find is as you start getting better at picking zones, the win rate usually is like 60%, 65, sometimes even 70%. I just say it's 50% just to show people that you can literally fucking suck and be no better than random chance and still make money. Because there are weeks where I have literally a 50% win rate. There's weeks like the week before last where I had like, I think I won literally almost every trade, and the one trade I was wrong about, I broke even on. It's crazy. But as you continue to get better and better, sure, your win rate will increase. But even if it doesn't, man, you'll still make money. Not financial advice, and I'm not guaranteeing you anything. I'm just saying it works really well. What you've said accurately characterizes everything I've just explained.
Okay, excellent. Thanks, bud.
Yeah, any other questions or anything I can clarify?
I think that's good, man. I'm ready to roll. So I'm just going to continue doing what I'm doing. So
perfect, man. Yeah, just continue tracking your trades, getting the data, and then also you'll get more experience seeing all the shit I post in the free Telegram channel. You'll be like, Nick's looking to sell there at that daily zone again. Cool. I've seen this shit a million times. And then a year from now, we'll be laughing, having this conversation where you're growing a $500 account to 10,000 in 1 week, and I'm bitching at you saying you can do better.
I know, man. I'm waiting for that day. So,
all right, it's good seeing you, brother. Cheers.
Hey, you too. Take care.
We've got Ahmet next, and Ahmet, you got that beautiful hoodie on. I love wearing hoodies. Go ahead, bro. Microphone needs to be unmuted.
Sorry. I think I got most of my questions answered. I don't feel much comfortable with hedging, so I would use stop loss instead. And then I wanted to ask you about your win rate if I use a stop loss, and you say it's sometimes 50 and sometimes it's more. So I think until I get better in trading, I just would use a stop loss just to just to be to get the practice.
Yeah, works fine.
Yeah, so I got a lot of my questions answered. Yeah.
Sweet, man. Yeah, what I tell everyone is just approach it as an experiment before you're profitable. It's like you have a handful of darts and you have a dartboard with a bullseye. You just throw in a bunch of darts, doing whatever you want, seeing what works and what doesn't. Do that in your trading. Don't even bother placing the trades on an MT4, MT5 terminal. Don't even bother opening a fucking demo account or live account. Fuck it. Just don't even worry about it. Just go to the trading view charts. Take setups that you think are likely to work. Put the little long short position size tool with your little stop loss and target and everything, and just let it play out and see what happens. Once you get a grasp for just following the same basic simple shit over and over, you're like, all right, here we go again for the 100th time. I just set an alert at the major zone on the daily or 4-hour chart, and then I set an alert below at the next zone, and then once it gets to one of them, you just enter a trade at the resistance or you enter a trade at the support, and you just let it play out and just see what happens. You'll put a before screenshot from the moment you entered. After the trade is concluded, you'll put an after screenshot. And then you can, if you want, you can add separate columns for hypotheticals. Like, what if I would have held to a 1 to 2 risk reward shit? What if I would have tightened up my stop loss and then had the same profit target and waited for a better entry? You can do all sorts of hypothetical shit, but it's essentially gathering a collection of data and also a collection of intuitive experience. That way it can help dictate the next decisions you make in an effective way to where it actually yields profitability, instead of you just like squirming around, writhing around, screaming like a fish out of the water. Very sad.
Yeah. Some of your videos, you will in the past you were taking 1 to 2 trades,
Mhm.
and now you are taking 1 to 1.
Well, keep in mind,
Is there a
some
reason?
of my trades will be negative risk to reward. Some of my trades I'll risk 5,000 and I'll only make 1,000 on them. Some of them I'll risk 5,000, I'll make 15,000 on them. It's all variable and it's all dynamic and it's all fluid and it's all nuanced. A 1-to-1 risk reward ratio to me is like a rule of thumb, kind of a guideline. It's not like a
Yeah.
fucking 1-to-1, brother, and that's it. Like it just kind of depends on the context and the levels. But yes, that's just to clarify.
Yeah, okay. Thank you, Nick.
Yeah, I can see you're getting very introspective and thoughtful. Your mind's being blown right now. You're just like, holy shit, he literally just said I don't even have to be right more than half the time and still make money. How the fuck is this true? I don't understand.
You know, I understand the hedging. It's just me that's not comfortable with it.
It doesn't matter if
Uh,
you're not comfortable because you have
taking the
zero risk
different
on the
trades.
line.
I did it once by hedging, and then it went sideways. It went up and went down at the forever. Then I wanted to take another hedge trade and another just to even it out. It took forever to get out of the trade.
Yeah, well, I mean, we also have to point out that if you're not using hedging appropriately, obviously, yes, it's not going to fucking work. Here's the simplified way I hedge, because it shouldn't scare anyone, especially if you're not even using a real account or a demo account. If you're just doing shit and seeing what happens, it shouldn't scare you. It should just be an experiment. Here's all it is, right? Price bounces at support resistance zones. Price goes up or down. You don't know what's going to happen. When it gets to a resistance zone, you're just saying, I'm going to enter a sell here. And then you look back on price, and price had maybe like had a huge bounce from like a zone like that. And so then what you do is you're like, all right, well, this next zone is up here. So if I'm right and price moves down here to this support level, that's like 700 pips. Cool. But if I'm wrong and it goes and it breaks above the current zone as well as the next zone, that's a little over 700 pips, somewhat, maybe like 800 pips. So what you're saying is, if it goes down here and I'm just right by random chance, cool, I'll make a profit, whatever. If you're wrong and you had your invalidation all the fucking way up here, then what that means is that this is only $1,000 risk. So your max risk is $1,000 or 2,000 or 5,000, whatever it is you select. But you're also saying, you know what, if it gets to this resistance zone, I would love to sell again right there, because if it doesn't bounce here at this first zone, it's likely to bounce there. So what do? Here's literally all you do. You say, if I take a sell here and it breaks above, I will hedge. And then once I get hedged, I will either wait for it to come back and retest the support, where I'll just close this sell and then leave the buy open. Or if it doesn't do that, if it goes straight to this zone, well, then you'll close the buy and profit, and then you'll add a sell because you think it's going to bounce there. So you'll close the buy, you'll make profit, add a sell. Then if it finally bounces there, cool. You can close both of them at net break even when they're like halfway between each other, and you made profit on the buy. So your outcome was a profit on the buy and a break even on the two sells. Now, what happens if it continues breaking above? You do the same shit. You just get re-hedged for both positions, and you just wait for the next zone. Maybe there's like another major daily zone further up here or whatever. You just do this over and over and over until you win. Now, keep in mind, if price truly does bounce at zones 50% of the time, what is the likelihood that you're going to get it wrong 3 or 4 times in a row? It is a statistical probability that it will happen at some point, but how often is that going to happen? Like when you look at the statistical probability of losing 3 to 5 trades in a row, even with random chance, it is a very small percentage of time that if you are drawing zones on daily and 4-hour charts, kind of like me, it's very unlikely price is just going to blow through 4 or 5 zones all at once. Very unlikely. Does it happen? Yes. When it does happen, I take a big loss that wipes out a week or two of profits. Fucking sucks. But 95% of the time, that doesn't happen. It goes to the next zone and it bounces if you're wrong. If you're wrong a second time in a row, okay, we get hedged on 2 positions and it comes up here. You close both of the hedges and profit. You add a third sell. And then on this third sell, you're like balls deep in sell orders because you've got 3 fucking sells right here. And then if it just moves back to this zone, you close everything, the whole basket of trades. This one at break even, this one at a profit, and this one at a loss. This averages out to break even. Not to mention you had all the fucking buy trades going up. You had that hedge going up that made profit. Then you had 2 buy hedges going up here that made profit. So you still made fuck tons of profit, and you broke even on all the trades you were wrong about. And you can call that a wrap. Hedging is simply saying, I'm going to enter a trade at a support or resistance. If it bounces, cool. If not, I'll hedge to the next zone. Once it gets to the next zone, I will manage my trade in a contextually appropriate way. and you just keep doing it over and over and over again. When it finally bounces at a zone, which it will 50% of the time statistically, then you make a profit, or worst case scenario, usually a break even. But usually, even when I'm completely wrong, I still somehow make a profit. It's just, it shouldn't be something you're scared of if you're just approaching it as an experiment. Does that make sense?
Practice makes perfect, right?
Perfect practice makes perfect. If you're practicing the wrong way, you're going to fucking suck at everything in life. So yeah, you have to have practice appropriately. But yeah, if you keep practicing it over and over and get experience, generally, yeah, you'll get better.
Yeah. Okay, thanks, Nick.
No problem, brother. It's good seeing you in that sexy gray jacket, man. I've got one myself right up here in my closet thing that I'm in a fucking closet right now. But yeah, good talking to you, man.
Thank you. You too.
Masood, you are next. Go for it, good sir.
Hi, Nick. Masood from UK. My question is, how do you decide to scale in the winning trades or add in the winning positions? For example, you did one in USD CAD when you doubled your account. If you can explain that from the chart, please. Thank you.
Yes, sir. So this will be real simple. So let's say I'm in a trade. Let's say this is like a daily or 4-hour zone or whatever. It was a nice resistance level. Price channeled up to it, broke past it, came back to retest. So I enter a buy. So I enter a buy. Maybe I have a plan to like add here at the next zone if it comes down here. And so let's say for some reason I choose to put my invalidation not only below this zone, but below this second zone as well. That way I've got a nice distance. And then if we just pop up and make a higher high, I make like, whatever, like maybe a 1-to-1. So if this was a $5,000 risk, make $5,000 profit. What Masood is asking, he's like, bro, if you're adding in profit, why the fuck would you do that? And how does that work? Explain that. So let me show you. Let's say price bounces at the zone and I'm in profit, right? So it bounces, it comes up here to this next resistance zone. Then it starts doing some shit like this and it starts bouncing like that. If it starts doing something like that, let me redo this to make it a little bit more clear. Just, we're going to cherry pick here just to make things simple. If I think price is going to be making a higher high and price is doing something like this, if the direction remains upwards, and if I can protect this first position at break even, meaning instead of having the invalidation, I could just move it up here to break even. So essentially be a break even stop loss. If I still think price is going to move to the final target, which in this case, the original final target just would have been a higher high, because the price is going to keep going in an uptrend, it'll make a higher high. So somewhere up here would be the target. If I still believe that that is the case, then I'm comfortable adding a position at the next contextually appropriate location, which is generally just a support resistance zone. Sometimes it's a break and retest. Sometimes price just forms a support and just starts bouncing at support. If I can protect the first position, so there's no additional risk, and if the second entry has its own dedicated invalidation zone where I can manage it, that means that even if I'm wrong on the second entry, sure, it'll come back to my first entry. It'll hit me out at break even. If it starts bouncing there again, I can just re-add the buy there. And then if it finally bounces up here, I'll just close it with that buy and profit, that buy at break even, move on to the next. But even if it doesn't, even if that position just hits the break even, goes straight to inval, well, this was still its own dedicated trade setup, which had whatever the allotted risk was, which maybe 5K, 1K, whatever it is you decide. You have a break even on that position. There was no additional risk. And you just have essentially one unit of risk open in loss or hedged or whatever for this position. And so if that happens, that sucks. Cool, whatever. But what happens if it goes up? You usually make double, triple the profit, which is why y'all saw last week in the close friends group where I was in like a $15,000 drawdown, added degenerately on fucking USD Canadian dollar at the zone, just because I really thought she was going to bounce. This is what Masood's talking about. So price was doing this, where it was rejecting as resistance. We literally got an entry so painfully good, it would make y'all's grandfathers and grandmas jealous who were trading back in the day in the 1929 stock market crash, getting perfect entries. Literally, our entry was like, or maybe that was another pair. It was like right up here at the top though. Masood's like, why the fuck did you add, Nick? Here's why I added. These previous lows and also the downtrend structure of just lower highs and lower lows, when it broke down below here, I still thought it was going to go down here to the next zone. And I closed early too, but I added right here just on this break and retest. Now, what I would have done if it would have broke above the zone, I think this was the original alert for me to manage it. Yeah, I think that was it right there. If it would have broken above, I just would have simply hedged this second scale in right here and then stopped out at break even on these two positions. I think I was in 2 or 3 positions at one point on this. So if it went into profit, it would have been a huge profit, which it fucking was. If y'all scroll through the trading history and the P&L history that I shared in the free Telegram channel for that entire account, 4 months of P&L trading history of doubling that account, you'll see that like I added heavy on trades that I think is really going to work out. And so to sum up everything and to answer it real simply, just so we all have something we can take away from this, when will I add in profit? Whenever the next setup occurs, and if I can protect the first position. Does that make sense?
Thank you.
No problem. Good question, man. We have Cherry next. Hey, girl.
Hey, Nick. So as you know, I've been trading my live 10K account for 2 weeks and I'm up 34%. So thank you for that and everything you're teaching.
Hold on, wait.
from-
Sorry. You're up 300%, you said?
34%. I've made 3.5K in 2 weeks.
That's
So
only
thank you very much.
That's $3,000. What the fuck are you doing? How much time do you have to be wasting to only make $3,000?
Dude, I know. I'm slow on the uptake. It must be my age. Anywho,
Yeah.
I think I have actually been doing my hedges wrong. So I've been setting pending hedge orders at my inval point. And so sometimes I find that I've gone into a hedge position just for it to reverse back into the way I thought it was going to go already. And then I'm stuck in this big inval point. So what you're saying is that you actually do your, I don't know if you do pending hedge orders or just wait for it to see what it's doing, but somewhat lower than your inval point or higher, you know, in between somewhere.
Correct. It's correct. 100% correct. So essentially Cherry's just saying I select my inval. It's usually on the other side of the zone, and you just get hedged immediately if it gets there. Now, two things to focus on here. The first thing is, do I use pending orders for hedges? No, I do not. I use alerts. And the reason I can do that is because I'm a bitch. I'm just playing. I'm not a bitch most of the time. What I do is I set my invalidations so fucking far that price is very unlikely to go there. Very, very extremely unlikely to go to my actual inval, where I will actually be in a full realized loss that I'll have to close, liquidate a portion of, hedge it, something like that. Very rarely does that happen because I set the invalidation so fucking far. What that allows me to do is it allows me plenty of equity margin to be able to manage trades way fucking before it gets anywhere near close to inval. So if it does start going to inval, there's stuff I can do immediately, like hedging immediately once it breaks the zone. But instead of a full like $2,000 pound risk, or I'm in a GBP account now, so 2,000 pound risk, I'm able to get hedged at like maybe a $200 or $300 loss, or a $500 loss in the case of gold yesterday. I'm able to get really, really, really tight with that. However, if it does move into profit to the original target, I'm making a full TP if it moves there. So if I've risked 2,000 pounds on the trade and it moves into profit, I'm making 2,000 pounds almost immediately with barely any work and barely any management. And it just happens statistically because it's a 50% of the time type of thing where that'll happen. If it doesn't happen that way, I don't get hedged and invalidated over and over and over and over and over very often because of how far it is. Does this make sense so far?
Yeah, it does. Yeah. I mean, the only thing that worries me about not setting pending hedge orders is the fact that there's a lot of price action happens while I'm asleep because, you know, I'm in Belgium and the time zones. So, you know, sometimes I'll miss a trade that you might call or that I might have had an alert for, which is fine. If I miss a trade, I miss a trade, it doesn't matter. But then if I can't do my hedges or whatever, and that's kind of why I've been setting pending hedge orders, which obviously where I set them, I'm going to adjust from what you've just said. But still, how do you manage that problem if, you know, you're asleep when the price action happens?
I simply missed the trade or I missed the management decision. And that happens every now and then. Yeah. To me, for some reason, it's just not been a big deal really the past year. But I get what you're saying because yeah, statistically, I will wake up and see, wow, GBP AUD alert went off at 2 a.m. I could have closed that in profit there, added. Now I'd be sitting in a huge fucking profit right now. But what happened instead? I just remained hedged, or it's just in a tiny loss still.
Okay.
So that's like the worst case scenario is there's not really much downside aside from the fact that I'm going to yell at you on another live session for instead of making 30K in 2 weeks, you've only made 3K. I am probably the only guru that has so many people getting fucking results that I bitch at y'all for not making enough profits. I'm like, you could do better, you little bitches. I'm just fucking with you.
I cannot tell you how thankful enough. I shared my story this morning in the Discord group, which I won't go into here now because it's not appropriate. But my goal is to make 2K euros a month so that I I can live off. And I've made 3.5 in 2 weeks. If I can average that out, that's my goal. That's, you know, if I make more than that, which I know I will, because I'll keep doing what you're teaching us, brilliant. But yeah, you're changing my life and the community as well. So I just want to say a big thank you to you and everyone in the community, because they're so supportive, and we share our stories and teach each other. And I have never seen anything negative in the community. So yes, that's all I have to say on that. Otherwise, I'll get all emotional.
You're welcome. I mean, those are fucking rookie numbers, though. 2K euro a month. Like, wow. You must have like 17 Pornhub tabs open and wasting so much time if you're only making 2K a month. I'm talking like maybe if you were doing 2K a day, might be a good starting point. Maybe. I'm just fucking with you. That's good. It's a great goal. And I'm glad you're getting value and results. And I'm glad you're happy.
I am. Thank you.
No problem, Cherry. Well, hey, you know, look, it's great. It's great to see you doing so well. I'm just so happy to see you just happy and doing well in the community. It's just a good, it's like a family here. All right, well, on to the next. Nick's iPhone says, hi, Nick and all. Hi, Nick and all. That's funny. This question might be a bit similar. Did it take a while to judge when to exit a hedge and enter opposite bounce trade without too much crossover? I seem to want to close a hedge for max profit on it, but can end up closing it too early. Maybe a little bit in the beginning. Here's the thing, bro. Your name's Nick too. That's cool. We're both named Nick. That's awesome. So what you do is you set an alert at the area where not only you would like to take profit on your hedge at, but the area where you are going to enter, like the area where you're going to add to your losing position. I'll give you an example visually here on the chart, because I know all you nasty men in here want to see the fucking visuals. You want to look at it. You just want to see visually. I want to see what it looks like firsthand. Here's what you do. You should focus on asking yourself if you do get hedged. So let's say for example, I'm actually, am I hedged here on this, or did I close this? Yeah, I think I'm hedged on this one right now. Hold on. Let me go and fucking check real quick. I'll tell you guys some shit. Nope, I retained the hedge on New Zealand dollar CHF. Why did I? So I'm hedged right now on this. Let me show you what happened. Let me show you what the plan is. And let me just put this little purple thing back on here, because I don't know why. Take the purple flag off. So I thought New Zealand dollar CHF was going to bounce here at this resistance zone. It's a daily chart. You could do it on daily or 4 hour. This is just daily. So I entered a short position right here. Cool. If it would have gone down to this previous low, I would have made a profit right here at that previous low. That's where I was going to get out at. Didn't happen. So I entered a short position. It broke above, so I got hedged. My final invalidation for this, I believe, was up here at that zone. This gives me so much room without price coming anywhere near my invalidation for me to manage this. Or it might have been above this high, but you get the point. It was above the second zone. Why was it above the second zone? Because right here has been a nice area where prices have bounced over and over. Bounces support, broken, retested once, twice, 3 times. I just think it's likely to bounce there. So it's a good management level to get out of the hedge. You'll see where my alert is sitting. My alert is sitting at the area I would be comfortable adding a sell at. And only if, or I guess I should say it this way, if and only if it gets all the fucking way deep into this zone, right up here and towards like the middle of it. You can wait for the top if you want. You're just going to have less trades. But if it gets to the middle, like for me right there, that's the position where I'd say, all right, cool. So if I was just looking at this and I was flat and not in a trade, I would think not a bad idea to take a sell there, and then maybe a sell here as well if it gets all the way up there. So the way I do it is I just set the alert at the location I would like to add to the losing trade, the area where I think it's going to bounce. Then and only then is where I will close the profitable buy hedge. Then I will add a sell here. If it bounces here, I'm going to close the first sell and the second sell. Probably somewhere in the middle, just get out at break even, and then I will have profit on the buy. Then boom, I'm on to the next. Now, if this doesn't happen, I'm short here, have a buy hedge going up, take profit on the buy hedge, get short again. If it breaks above a little bit more, well, I'll just get re-hedged again. And now I'm in like, you know, double whatever the original loss was. But keep in mind, the original risk was all the fucking way up here. So even if I risk 2,000 pounds on this, my max drawdown may be around 1,000 pounds, maybe like half of what the original invalidation was. And that's if I'm wrong twice in a row. Then what am I going to do? If I'm hedged up here, if it gets up here into this zone, I'll close both buy hedges, because there's a sell here and a sell here. So you need 2 buy hedges at the same volume and position sizing as the first 2 sells. I'll close that up here. Then I'll add a third sell like a degenerate fucking moron. And then if it bounces down here to the next zone, I'll close that one in profit. I'll close the second sell at a break even, and I'll close the original first completely fucked up sell at a loss. And this will basket out to around break even for those. And I will have also made profit on one buy going up from here and two buys going up from here. That's a pretty good trade. And that's if you fuck it up 2 or 3 times in a row. That's if you're just have no idea what you're doing. You still make a profit. Anyway, so let me see what your question was. So you said, I think I've got it right. So you're not too worried when the hedge profit starts to reduce, but once it looks to be bouncing. Yeah, you can wait for it to start bouncing. What I do is I approach it as a second trading opportunity. Keep in mind, the only reason under Odin's green earth that you need to be hedged at all is if you it's actually just this one thing. Yeah, it's just this only thing is if you no longer are convinced as to what is going to happen. If you don't think it's going to go up, it's going to go down, or you can just look at the chart. You're like, I don't fucking know what's going to happen. I have no clue what's going on. Just get hedged, retain the hedge and hold it until it goes to the next zone. If it breaks and retest the first zone you entered at, liquidate the first position at break even, and then keep the hedge open that you had for the buy. And then if it bounces there, cool, you make a profit. If it just breaks the zone, you get hedged and it just immediately goes to the next resistance zone, close the buy and profit right there at the resistance zone where you would enter the next sell. And then immediately after you liquidate the buy hedge, just enter another sell. You're adding in drawdown. Then if it bounces there, you can roll out of that in a net break even. You still had a profit from the buy going up and a break even for both sells that you completely fucked up. So I think yeah, let me know if you need any clarification, but I think that answers it. You only get hedged if there's uncertainty. So if you don't know what's going to happen, you should either be in one of two positions. One, you should be hedged to where there's no additional loss or profit since you don't know what's going to happen. When you are hedged, the only reason you fuck with the hedge is if it's at the next zone that you think is going to bounce. That is it. You do not touch the hedge otherwise. The second thing you should do if you don't know what's going to happen is you should just close the trade at a loss, or you should just not be in a trade. You just don't enter a trade. Just leave it alone. You know, don't overthink it. Let your intuition speak for you. If it gets to a zone you don't think it's going to bounce, don't enter a trade. If you get to a zone you think it's going to bounce, enter a trade. If you're entered into a trade, but now you no longer think that your original idea is going to play out, either liquidate the hedge and profit, break even, or loss, or liquidate that position and profit, break even, or small loss, or just fucking hedge it, slap the hedge on and just leave it alone. And then if it goes to the next zone, manage it. So we're going to move on to Jordan says, my goal is 5K daily and I'll pay you 30% of my profits every day for a year if I can get there in a week. That's a promise. Cool, Jordan. Okay, yeah. If you're serious and you just feel like sending me more cash, cool, whatever. Trent says, how does that affect your one-to-one guideline? Is it tossed out in this scenario? That's correct, Trent. Remember, the one-to-one guideline is what you said. It is just a guideline. It's just a way of saying, like, I'm entering a trade. It would be nice if it came here, and then here is like at least 1 unit of potential gain for what I was risking max. That just kind of checks out. Because imagine if you're going into every trade risking $5,000, but your potential for profit is like $500, and that's what you plan on. If you do that over and over and over and over and over, you're going to be closing a lot of trades way too fucking early that could likely go into more profit, because you're the profit, you're only taking 1/10 of what you're risking. And if your win rate is like mine, for example, 50 to 60%, it doesn't work as well as just like holding it. Like, let it go to the next zone, let it go to the next low. If you've entered a sell, the previous low is there in the chart. And if it's around a one-to-one, sometimes it's less, sometimes it's more. Fuck it, just close it wherever you think it's going to bounce at. But as a rule of thumb, general guideline, yeah, one-to-one is kind of like, I think it's like the bare minimum you should go for. It's like saying, I'm risking 5K on this, and I want to at least be able to potentially make 5K without it being a stretch. So one-to-one, it's a good guideline. Chris said, let me just take a sip of fucking water, y'all. I've been talking so much. Y'all just have such good questions today. I'm just like rolling it out. And we're lucky we're recording this live session because it's a very good one. Chris says, how are you going to manage gold? If it was me, I would close the hedge at the resistance area that we're at right now and add a sell. And if we break the resistance, hedge again and sell at the next zone. I want to hear your opinion, man, because it's making me wonder. That's exactly what I'm going to do, Chris. With one caveat, and I'll explain that right now. But that's essentially what I'm going to be doing. So for those of you who are in close friends or just following my Telegram trades, you know, that I share for free in Telegram, just saying, hey, like if I post something in Telegram, like gold looks great right now, and I have the zone and the arrow, you fucking know damn well I'm entering. Now, you don't know all the context and all the plan and the risk management structure and the invalidation, but you know that I think it's going to bounce right there. So if you're following my trades, whether you're in close friends or the free Telegram, doesn't matter. It's essentially all the same shit because of how simple it is. You guys can piece it together. Now I sold right here. I'm going to sell right there. As it broke above, I got into a hedge right here. Now, these first two sell orders were broken up. One of them was right here at half the position size, and the second one was like right here on the previous high. But I've hedged, and the hedge is equal to both of these sell positions. So these are, I think, 0.4 each or 0.2 each, and the hedge is a 0.4. So I'm equally hedged out right now. Nothing's wrong. Now, this is actually the exact zone I want to manage it. I think the alert just didn't go off on Friday because gold was like, what, like a few pips away from the zone. Yeah, so gold was like 17 pips away from my alert. So, I mean, this is essentially the zone where I'll be managing it on Sunday. In fact, let me just go ahead and drag it up to that a little bit more the high. So here's what I will be doing when market opens and after spreads calm down and gold markets open for trading. I will be, let me just clear all this shit out here, all this bullshit. Let me just get all the shit off the fucking chart, everything, just all of it. All right, what I will be doing here is, provided that price does push a little bit further up around this previous high, then I'll liquidate the buy right there, add a sell position right here. And then what I will do is, if it bounces, cool. I'm probably going to hold the bounce all the way up to essentially this previous high. I'll roughly break even on these two sells. I'll make a profit on that sell going down. And not only that, but I also would have had profit on the buy. Now, is that going to happen? Who the fuck knows? There's a 50-50 chance. If it bounces there, cool. If not, cool. If it does not bounce here, here's what I will do. I personally don't like being in 2 to 3 to 4 hedges at once. So I personally just sort of bitch out. If price pushes up here and it breaks the zone, what I will do is I will just liquidate that scale in right there at a small loss. And then I will just get re-hedged on the first 2 trades. This is, let me just make it simple. This is one position down here of 0.4 lots, right? I've just broken it up into a 0.2 there and a 0.2 there. Let's just say it's one position at 0.4 so we don't all get fucking confused. There's one sell right here. There was a hedge going up that gets closed in profit. If I sell again up here, this is my specific plan. If it goes into profit, great. It'll be a huge profit. We'll all be jumping up and down, be thousands of dollars. And then I'll be bitching at y'all for not making enough. And if it doesn't work, it's no problem because I'll just close this at a small loss, a couple $100 probably, however much it ends up being. And then I'll just re-hedge the first sell that I was in all the fucking way down here. Having still made profit on the buy going up, I will retain this hedge until price either does this, breaks or retest that zone. Then I'll close the sell down here at a smaller loss and maybe add a buy. I'm not sure if I ought to buy, but I might add a buy. So then I'll have 2 buys. And if it bounces up there, I'll make a profit. And if that doesn't happen, if price just breaks above the zone and triggers this hedge, well, it's no big deal because I'll just wait for the next zone. This loss will not get any bigger, and it's still not even my full invalidation. My full invalidation was calculated really far, and I went in really small. I even wrote this whole long pain in the ass message for you guys to control risk on Friday. This long message. If you're going to be trading this, size it appropriately. Be very careful. Do not be an idiot. You can easily blow your account. I'm only using a 0.2 on a 50K account. I gave you guys this full disclaimer, and I think one guy still blew like 50% of his account. Fuck. I try my best to give y'all appropriate risk management guidelines, but you know, it is what it is. So this is still going to be a relatively small hedge loss for me, even if I'm wrong, even if I'm wrong this second time at all, because keep in mind, it's going to bounce somewhere. It's not going to keep rocketing up straight bullish candle after bullish candle forever. It's either going to bounce here at this zone, since it didn't bounce at the first, or it'll bounce at the next zone. Regardless of what outcome happens, if it goes all the way to this third zone, I'll have a final invalidation for all positions just above here. Far enough to where it's not just going to pin it and invalidate me and they go. But I'll close the hedge there. And then what I will do is I will add a sell. And then honestly, since it's gold, I mean, if it gets like halfway between these positions, I'll probably close it like halfway somewhere in here. Maybe I might wait for this previous zone, but as soon as it's a net break even on both the sells, I will have made a profit on the buy hedge from here to here. And then if it does break a second time and I have to go in all the way to the third time, I'll just liquidate that second scale in a small loss, hedge the first position. Then if it gets there, liquidate the hedge, having had 2 buys in profit, 1 small loss for a sell, then a break even on the rest. It'll still probably be a net profit. And keep in mind, that is fucking unimaginably insane that you could be wrong 2-3 times in a row. And it's that wild and you still somehow come out on top. If I'm able to get out at break even, I'm happy. Why? Because if I break even on half the trades, but then I profit on the other 50% of the trades, the profits come easy and the losses are normally just either break even or tiny, or even so, oftentimes just a little bit of a profit. So it is what it is. Let me go through and read through the questions here. That is how I'm going to manage it, Chris. Let me know if that helps. Trent says, Roger, thanks. No problem, Trent. Paul says, your theory about not knowing what will happen next and still make a profit or break even is the same as what Mark Douglas said in a book, Trading in the Zone. That's awesome. Someone said, Cherry said, fantastic book. Paul said, yeah, that book and its presentation on YouTube made so much sense. Good deal. JP says, what if you for Euro GBP go short on a daily resistance level and there are no other zones higher, even if you look on the weekly time frame? So you hedge, but you have no idea where it might bounce again because there are no clear zones above on any large time frame. So two things. Number one, you can retain the hedge and sometimes price will come back to retest the zone at broke. You can liquidate your first position that was wrong at break even and then retain the hedged position. That way, if it bounces, you could just close it at break even when it comes back to your entry, or you can hold it if you think it'll keep going and make a profit. Now, what happens if it doesn't happen? What if it just breaks above, never comes back to retest and fuck with your entries? It just keeps ripping up and up and up and up and up. You can do one of two things. One, you can use profits from other trades that have worked out in profit to slowly chip away at the hedge and roll yourself out of it. Or number two, you can use the directional bias to start adding in if it continues in its trend. So for example, let's go, fuck, how am I going to do this? Let's say that gold breaks above this final zone. Let's say we waited for this zone. We didn't enter any trades at all down here. We just waited for this and we sell right here. And then price breaks above. So you're like, oh shit. So prices broke above this zone. What are we going to do? Well, let's add at the next zone. But then you look left and there's like no other zones to add at because gold is at all-time fucking highs. So there's no other zones to add at. So you're just like, well, shit. How am I going to do this? Like, what are we going to do? What's going to happen? So what you can do is if it does break above that zone, which it might, I mean, who knows, right? Gold could do anything. Anything could do anything. Anything could happen. So you're in a, go ahead.
You're not sharing. You're not sharing the screen.
Thank you, bro. I'm so sorry.
No problem.
Fuck y'all. All right, let me re-explain this real quick. So let's say you didn't do anything and you waited for price to get to this resistance zone right here. And you were like, I'm going to sell. You're not in any other trades. You just thought it would bounce at that resistance, but it breaks above. And you look back on the chart and there's literally no other zones you can add at to manage the trade. The only two options you have is a break-in retest here. So it breaks, if it comes back to retest, you can close the sell at break even and just keep the buy that you had entered. Then if it bounces up, makes a higher high, you make a profit. Cool. Or you can just retain the hedge, which it would look something like this. You'd have a sell here. You would have a buy up here. And you just retain the hedge until price goes up. Sometimes, let's say this happens and you get hedged and then it starts doing some shit like this. You'll get like the next setup, maybe something like this right in here. And if it starts doing something like that, where it's like a break and retest and the direction looks like it's up, what you can do is you'll keep the hedge, but you'll add a new position here. That way you're not fucking with any of the lot sizes here and you're not increasing the risk exponentially. You could just retain the hedge, but you enter a new position and you have the invalidation maybe like all the way down here. So now what will happen is if you're wrong on that one and it goes into drawdown, this first position is not going to lose any more money than it's already lost. And of course, it's not going to make money because you're hedged. If you're wrong, it'll come down here. You can add at that zone right there. You can add another buy. And then if it bounces there, well, then you make a profit on that buy, break even on that buy. And then you just, this was a profitable scenario. Then you can close this hedge and the net, you came out at a net break even on the entire basket of trades. Now, how often is that going to happen? I don't know, 50% of the time. So if you do get into this trade and your invalidation is there and it just bounces up and gold continues rocketing in an uptrend, if your risk right here on this trade was like, in this case, 930 pips, if it just bounces up about 900 pips, you're in about a 1-to-1. And if you're in a 1-to-1 and this hedge right here was the same unit of risk as a 1-to-1, let's say $1,000, for example, well, now you've made profit on this for $1,000. Now you can just close the entire basket of trades. I'm just gonna do this rectangle thing. You close the entire basket of trades at a net break even. Why? Because you had a profitable buy on this next setup and you had a losing hedge on this one. So this is one unit of gain and this one unit of loss. So it all just averages out to break even. There's multiple ways you can manage it. And let's say you don't get a new setup at all. Sometimes, bro, you just have to bite the bullet and just take the loss, because keep in mind, it's only 1 unit of loss. And if that happens like only 5 to 10% of the time, it's not too big of a deal. And but really that you should always try to get out at break even or profit if you can. which means rolling out of the trade using profits from other trades that win, or just waiting for the next trading opportunity and then going in on the next trading opportunity using that to roll out. So that should answer your question. I'm going to the chat here. Yeah, let me know if that helps, JP. Oh, you said thanks, Nick. You said thanks, N. You're welcome, Jay. All right, I'm going to go through these last sets of questions and then we'll finish up our fun little Saturday morning live session. Let's get it. Here we go. How long do trades typically take to play out on average? I see you normally use daily 4 hour and 1 hour, usually a couple days to a couple weeks. Maybe like a week or two, maybe on average. I don't know. Some trades work out on like a day, other trades don't. Tom says, hey, Nick, do you actually set your take profit levels or only close manually by eyeballing it? I close manually. And do you ever take partials and leave winners run, or you close full? I typically close full because price is just going to go up or down at the next support resistance zones usually. So I just, if I think it's going to bounce, I just get out. If I still think it's going to go, I stay in. If you keep using hedges and risk management, it's really hard to blow an account. Am I wrong? It's barely impossible. I don't want to make any claims like that because a lot of people may misrepresent or mischaracterize or misexecute what I'm saying, and they might blow an account not doing what I'm doing. But for me personally, I'll just give you an example. Like for my large accounts, every account that I've started 25K and up, 25K, 50K, it's pretty soon I'll be starting 100K accounts. I have never blown them. The worst drawdown I've ever been in was like maybe like a 50% drawdown. And that was around Christmas time where everything was slow. Spreads were huge. And even then I got through that and still got the account to the growth target. Took 4 fucking months instead of 1 month or 2 months, but still I got it to the growth target and I was able to avoid blowing it, which I'm just happy to have not lost the account. I would have been happy to break even on it, but not only did I not just break even and not blow it, I made a profit. So for me personally, and I'm not giving you any type of financial advice or guaranteeing you or promising you anything, but for me personally, it's very difficult to blow an account because I'm using contextually appropriate hedging, dollar cost averaging, and I'm only risking 2.5 to 5% equity per entry and invalidation. So it's just hard for me to fucking fuck it up because if I have a 50% win rate, when it finally bounces, I make money, and that happens half the time. So it's just a matter of where price is going to bounce at. We got Sanju raised his hand. Let me finish these questions in the chat first, and then we'll finish up. Chris said, yes, it helped, man. Thank you. Sweet. Andrea says, what about if gold breaks the invalidation? Already answered that, so you can watch the recording. Alex says, hey, Nick, how would you manage the trades if they are likely the same trades? Say CAD CHF, AD CHF, will you take both trades as there's a setup? It's practically the same transaction. So the answer, Alex, is yes, I will, but I usually have, in most cases, generally, most of the time, usually, overall, I just have a 2 correlated asset or 2 correlated instruments per, like at a time rule. It's just a guideline. So if I'm in CAD CHF and AD CHF looks great, I'll take them. But will I be in CAD CHF, AUD CHF, Euro CHF, New Zealand dollar CHF? Will I be in all those at the same time? No. I'll probably just pick 2. And if I'm just really tempted, just really getting excited for like a third setup, I might go in with like half my normal risk or like 1/3 of my usual risk just to still retain risk. Because when you start getting overexposed, if you're buying CAD CHF, AD CHF, New Zealand dollar CHF, Euro CHF, if you're just buying all the CHF pairs like a fucktard, I'm just playing. If it breaks and goes against you on one of them, it's likely going to do the same shit on all of them. So you're no longer taking one trade at 5% risk. You're taking one trade essentially, because all of them are probably going to do the same thing short term. You're taking one trade at 20% risk. You're just adding another layer of risk to each trade when it's essentially the same setup. So for me, Alex, I have a general rule of thumb where it's like I'll just do 2 correlated instruments at a time. But I will break that rule depending on the context. Scott says, okay, how do you control the colors of the arrows so easily in TradingView? Yeah, I'll go. Everyone else has just said thank you so far. So that'll be the last questions in the chat. Then we'll hit Sanju after this. And then we'll go. We're not going to hit Sanju physically. We don't want to hit Sanju. Sanju, I love you. I would never hit you, Sanju.
Thank you, bro.
Yeah. Here's how you change the colors, Scott. You put the little arrow tool on your chart. I've got, this is I think this is a trend line, and I've just added an arrow to the end of it. And this is an actual arrow. But how do you change the settings? You right click, So this is a
Oh,
trend
okay.
line.
Okay, so you just put an arrow on your segment.
Yeah, so with this, you can do the settings and you can edit it. I put the arrow on the right side and I changed it to red. You can change the color here.
Okay, great. Thank you. That's all I needed.
Oh, sweet. Okay. Sanju, you're up. Go ahead.
Yeah, the other trick there for the arrows, right, is you can save them as a template for various colors and pick the template depending on what color you want.
How do you make a template?
So just right click on the arrow, right click on any arrow, make an arrow, right click, settings, go to settings. So color you like the color, bottom left, template, save as blue arrow. Save as blue arrow.
Okay, that's too cool. I love this. I love this program.
Right. Now redraw again, make it red arrow next time. So then depending on what template you want, change the color first. Change the color to red. Or whatever, red, save as red. There you go.
So now you can just draw the arrow and then, oh shit, it's red. I want it to be blue. You just right click and you can do template, blue arrow. Sanju, you are a god sent from the Lord himself to help my trading become more simplified when I'm marking up my charts.
There you go.
Both.
Yeah.
Sanju, that was, yeah, go ahead.
There you go. So GBP CAD on the daily chart, you think it's a good sell next week if it comes up a bit higher?
Let's see. I think someone asked me about this last week. Let me see if I can find the damn chart somewhere. Yeah, I do. I'm waiting on it. I'm still waiting. This extreme high right here. This will be real nice to manage. Look at that zone, man. Oh,
perfect.
Oof.
All right. Next question is on the GBP AUD, right? GBP AUD. I know your time frame for holding the trade was like around a month or so, right? Or however long it needed.
Yeah.
But then you bailed within a couple of days. Even though the structure hasn't broken, it's still lower highs, lower lows. It's kind of staying there. And given a month was your horizon, what made you bail out in a couple of days?
I'm a bitch. I mean, it was just, I was consolidating. I was in too heavy. So, if you watch the recording, I explained this in more detail at the beginning of the call, but essentially I was in 3 short positions. You remember?
Right. You took 3 short positions, even though a month was the horizon, the price was still flopping there. So what made you enter into 3 positions, right? Given a month horizon, and then what made you bail out?
Correct. So keep in mind, I was never fixated on the month horizon. That was all you, brother. I did not give a shit how long it takes.
No, you said you said targeting the lows, right? The daily lows. That's the statement you made.
Yeah, correct. So you were like, how long do you think this trade might take? It's on the daily chart. It's only a couple candles. I said maybe a couple weeks, month, maybe 2 months. And you were like, okay, but keep in mind, I am never fixated on that because I know there are so many things that can happen from now until then. It's never going to be as straightforward as just like, it just goes straight to the target in a day. And that's that. I know there's a lot of stuff that can develop. So what I was positioning myself is provided that the downtrend structure was maintained. So just the lower highs continue to be in place. I told you guys whenever it pushed down to here, it knocked out the low. We entered like up here, I think it knocked out the low. I had another sell. And then I told you guys, if it pushes back up to make a lower high, I'll enter a third sell. Now, what this would mean is that since I'm adding triple the risk, if the original target was all the way down there, let's say 1,000 pips, what's 1/3 of that? Sanju, what's 1/3 of 1,000 pips?
330.
330. Yeah. So that means price would have just had to have moved right here. And then provided that I just kept my invalidations tight and the price breaks above, I just liquidate, get out early, take small losses around break even. That means that I had all this potential for huge profit and it didn't even have to move as far. So that's why I added into the positions. Now, that was all fine and dandy until the boogeyman came on Friday. Here's what happened. I entered this third position. Whenever you're extremely like net short on a position, you're in a large position size. as soon as it fucking breaks the structure that you think it's going to hold, for example, this like all these lower highs coming down, as soon as it fucks with that or it looks anything looks sketchy at all, I usually just liquidate a portion of the position or I just exit entirely. Now, my open basket of trades on this was roughly break even. I think it was actually a small, it's like a $40 loss or some shit like that. But essentially, it was so small that I was like, the risk was so big. Let's see what this was. $35 loss, $90. So I ended up negative maybe like what, $50 on this. So no big deal. It's essentially break even. Whenever price pushed up to here and started failing to just go straight down, I thought it would just kind of reject, go make a lower low right away. It'd be all fine and dandy. Whenever this shit started happening, bro, where it was like green candle, bearish candle, green candle, and then a red candle, but still bullish, and then slowly like sets of green candles trickling up, that made me kind of start wondering like, okay, if this was going to bounce, it would have just fucking come up here and it would have bounced immediately. Add in the fact that I'm gonna be holding 3 short positions over the weekend with no hedge, no stops, no pending orders to protect it at all. Market could gap up. It could gap up and profit down here. It could also gap up and draw down up here and make me unable to manage the positions in a contextually appropriate way that controls risk. So I could end up having a bigger drawdown than I ever planned for, anticipated. So for in the totality of the circumstances, I thought it would be better to just liquidate all 3 positions right around break even. And then if it does push up into here, I explained this earlier on the call before you hopped on, I'm just looking to add another sell right here at the tippy top of the highs, or further deeper into this weekly zone, I'm looking to add another sell. Because in the weekly, it still makes sense, except I would just have like a better entry if it pushes all the way up into here, right around this area right here. Like resistance, that was fucked through right here. Support, if it pushes all the way up into there, I just think it's likely to bounce with a final inval just above there. The lot size will be based off of this up here, which gives me plenty of room to manage, add in 830 pips. And if it does go down to the lows, it'd be at least a 1-to-1, if not maybe a little bit more. But keep in mind, there's so many other ways to get out of it. So that is why I added those 3 positions. I really thought it would bounce. And the risk seemed too high for me and it seemed too consolidated on Friday. So that's why I was like, I don't think this is going to be worth holding. I think it's going to be more of a pain in the ass than it's worth, because it's not rejecting and making like a lower high easily. It kind of looks like it's going to just trickle back up. So that's why I liquidated everything on Friday at break even. Does that kind of help?
It does, Venkat, and I think that's a great approach, right? But the thing is that this kind of an approach, it's very difficult to back test and collect data on, right? Because there are so many nuances out there in terms of, tiny blue bars, red bars, and all that stuff. So how does one back test this approach with all these hundreds of nuances out there?
Correct. Perfect. So that's the wrong mental approach from my perspective, because you can't back test it. You can't. How do you learn it? It's something I've said many, many, many times before. What is the best way to learn anything?
Practice, repetition. I don't know.
Yeah, it's just the experience, right? You just get experience seeing the same shit happen over and over and over and over and over. And sure, you have your basic guidelines, like it gets to a support resistance level, I sell or I buy. It breaks, I hedge. It goes to the next zone, I add at that. Sure, you have the guidelines. But as you continue to get more and more experience, in my case, 7 fucking years, you start seeing the same shit over and over again. And that experience, that applied experience generates intuition. And once you have that intuition and you can rely upon it for making trading decisions, that is where the wisdom comes in, where you can make discretionary, subjective trading decisions that make contextually appropriate sense. And the only way you get that is through experience. You cannot scientifically go and back test that. You probably could, but there's so many moving parts to it, it would be very hard to do. Intuition is the subconscious accumulation of information that helps you. It generates that feeling of like, I'm standing in the middle of a highway and there's a fucking huge truck driving towards me 100 miles an hour. I have this weird urge to get out of the way. And I don't know scientifically all the different metrics to behind that, but I have this weird urge from experience and evolution to just get the fuck out of the way so I don't die from the truck about to hit me. Trading is the same way. You may enter a trade, the candles may develop in a certain way that you cannot even explain or articulate or communicate to someone why you feel like it's not going to work, but your experience, your reliable experience that generates that intuition that you can actually rely upon for good trading outcomes, you use that and you say, I don't give a fuck what you guys say. I don't give a fuck if I can't even explain it. I feel like this is not going to work. Or at worst case scenario, I just feel like it's going to be more of a pain in the ass than it's worth to hold on to. So those decisions like that will help you like liquidate trades, get out of bad trades early, and also it'll help you add to good trades and have more profitable outcomes and less not profitable outcomes. The simple answer is it just takes experience seeing it over and over again. Does this make sense?
Yeah, it does. Yeah. Thank you.
No problem, bro. I wish it could be scientific in black and white. So while I can say that it will still remain simple, yeah, you have to get some experience. And sure, you can use that experience to your advantage, but it's no different than anything else in life. It's like riding a bike. You do it on the first day, it's maybe it'll be hard. You do it after a week, it's a little bit easier. But once you've been doing it for 10 years, it's you don't even have to think about how you do it. You don't have to explain to someone how the angular acceleration of the wheels makes the bike balance perfectly. You don't, you just fucking know. You get on and you just know what to do, and you let your intuition guide you and your senses guide you.
Right. Makes sense. Thank you.
No problem, brother. All right, we'll finish up these last few questions here in the chat. Tom says, quick one, Nick, you mostly using daily zones? Thought you used 1 hour zones too. I use the daily and the 4 hour and the 1 hour all confluently to make trading decisions. There is no one specific thing. Those of you who've been in Close Friends for a while have already heard me say this before. I don't use the daily for the zones, the 4 hour for the trend direction, and the 1 hour for the candlestick rejection. I don't do any of that shit. I use daily, 4 hour, 1 hour all confluently. I use all of them to help assist me in my trading decisions. But keep in mind, I'm just taking bounces of major zones. If you go to the daily and zoom in and draw a zone, it's zero fucking difference from going to the 1 hour and zooming way out and drawing a zone. You're going to get the same shit. So I wouldn't overthink it as far as like, which time frame to use for that. Use the 15-minute for the candlestick pattern, the 1 minute for the direction and the bullish closure. We'll do this and that. I don't fucking do any of that. I just use those 3 time frames in confluence to help me make trading decisions. Tom says one more. Do you have a limit of pairs to be balls deep in at once? Not right now, but I'll do it on a situation by situation basis. If I'm balls deep in like 2 or 3 trades, and I know that if they go the other way, I'm going to be at like a 20% equity risk, you probably won't see me going balls deep into like 10 more trades. Yeah. But all that's on a situation by situation basis. Jordan says, I'm newest here probably. Do you use TradingView for visualization or actually placing orders through them? I use TradingView just to do the chart analysis and markups and drawings. Yeah, so I put the little stupid rectangles and arrows on TradingView, and then I place the trades physically using MetaTrader 5 with one of my many various brokers. That's what I do. You said you can't find any broker offering more than a 30-to-1 leverage to be able to connect with them. Yeah. So Jordan, are you in the Close Friends content or the compounding course content? Let me know which product you're in. Close Friends, sweet. So Jordan, the second video in the Close Friends lecture content at the, I think the 55-second mark in that first video, the first 50 seconds in, explains everything you need to know about brokers and everything. It's done? What do you mean it's done? Tom says, Nick, in your videos, you claim to be a dumbass, but I believe you are actually pretty smart. Albert Einstein once said, smart people simplify things. That's all. Thanks. Awesome, Tom. Welcome. Yeah, that's interesting. I'm not trying to self-loathe myself or be, condescending and patronizing, but like Socrates said, he's like, I know nothing. The only thing that I know for sure is that I know nothing. But him being really humble actually made him kind of like not completely a dumbass, and people really looked up to him. He had a lot of really good philosophical points of view on things, good perspectives. So I don't know. I try to be humble because I still do realize how I don't know everything. And just like Paul said right here in the comments, like, you don't know what you don't know. It's true. You don't know what you don't know what you don't know. There's so many shit I still don't know. And like, I've been trading for 7 years and I'm still learning new shit every fucking week. So it's one of those things. Become a lifelong learner and then stay humble as fuck. Don't ever, the moment you feel like you've got it, oftentimes, not every time, but oftentimes in life, that's the moments in life where you start to fucking suck at something because you get so up on your high horse with your big 10-inch dick, slapping everyone in the face, that then you didn't realize all the shit you didn't know. And somebody else who was willing to be humble and drop their ego and learn more than you ends up outpacing you and succeeding, and ends up turning around when they're in front of you and stabbing you in the gut and pushing you down into the mud and saying, you ego-ridden, non-humble bitch, I'm the one that won because you couldn't keep learning and I kept learning. That's kind of extreme, but you get the point. So Jordan, if you said you watched that video, bro, at 50 seconds into that video in the Close Friends lecture content, I explain everything about brokerages. Let me see what your question was. You said, I can't find any brokerage offering more than 30-to-1 leverage and be able to connect with them. There's CoinX, Trader's Way, depending on where you live. CoinX, Trader's Way, Hugo's Way, Nash Markets. You're in the UK. Yeah, bro, you can use so many of those brokers. Like try CoinX. CoinX is great. They're having some issues with like their customer data leaked or some shit like that. But there's a ton of brokers. Also, what I tell people is go and just Google like best Forex brokers. I don't know, best Forex brokers, like top 10 Forex brokers or something that offer 1 to 500 leverage. And if you do that, you'll find a lot of brokers that are 1 to 500 leverage, that are offshore, that don't require KYC verification, know your customer verification, that you can trade with. I am not I'm not affiliated with any broker. I do not profit from suggesting any broker. I have no connection to them at all. So just, this is complete degeneracy, which is why I just use multiple brokers, because you never know who you can and can't trust, especially when they're unregulated. So go and just do some research and just pick one. The broker support teams are usually pretty cool. Most of them have live chat on their websites. So you can just chat with them. Other brokers, yeah. Desiree says that's when experienced pilots crash airplanes. They thought they knew everything. Yeah. Julian says, hi guy, I am new as well. Can you save me brokers with 1 to 500 for European people? I am on compounding group. Yes. So in the video at the end of the compounding course, it's the video that it's called like my complete approach to trading. I cover brokers in that video. I think at like the 20-minute mark. Let me see. Pay attention because I'm about to tell you the video that it's in. So I'm just trying to find it here. Let me see, Mike. Yeah. Okay, so in the compounding course, it is the video called The Complete Process of Compounding Your Account from the original compounding course lecture content. So go to the compounding course, scroll to the end of the course, and at the bottom, it's a video called The Complete Process of Compounding Your Account. In that video, I talk about all the different trading tools and resources you'll need, including the brokers I use, at the 19-minute and 28-second mark. So just go to that video, The Complete Process of Compounding Your Account, and then go to like the 19-minute mark in that video. That's when I start talking about brokers and everything. So yeah, that should help you, man. Try Vantage, bro. Vantage and VT is pretty nice. That's the broker I'm using right now for this new account. It's like the account's in GBP. I'm testing with them. The deposit cleared. It's good. Yeah, this is VT Markets PTY Ltd, VT Markets Live Access Server 13 US. So yeah, VT's cool. Using a variable account with them. Cheaty says, I'm out, Nick. Appreciate you always, brother bear. Remember to watch Top Boy on Netflix for the accent. My British accent or English accent will never get good. Thanks, bro. Have a great Saturday. Yeah, you too. Oakshard says, Nick, I have a question. Doesn't matter whether it's 1 to 500 or 1 to 100 leverage if I'm managing risk with lot size. No, it doesn't matter. But the problem is if you start getting into too many trades, you're going to want to just have that extra leverage as like a safety net, because it allows you to, if you need to, add more positions and do this and that without ever coming close to the equity margin requirements. So that's why I prefer to use like a 1 to 500 or 1 to 1000 leverage. Because even though I'm probably not going to chew up all of that leverage in my trading account, it's just good to have in case you get to a position where you're in like a 20-30% drawdown on the account that you're compounding. And you don't ever want to be in a position where you're like, fuck, I've breached the margin requirements for this account and I cannot add any more positions. I have to fucking liquidate these at a loss, which is stupid because the price is probably going to bounce here at this next zone quite. So I could be adding a sell here, but I'm already in my max amount. It's already chewed up all my margins, so I can't add another position. It's just a pain in the ass. So that's why I suggest just do a 1 to 500 and 1 to 1000. You're very rarely ever going to come close to using all of that leverage, but it's good to have. just in case. But yeah, if you're managing risk through position sizing, especially in the way I teach, you're 95% of the time it's never going to be an issue. And the 5% of the time it is the issue, you're going to blow the account, you're going to lose it. Trading's risky. All of y'all are probably going to lose money. I'm just a fucking idiot here yelling at you on a Zoom session. And with that being said, this was so much fucking fun. I love you guys. I'm happy being able to do these calls with y'all, and I'm going to hop off here right now. So thank you guys for hopping on and enjoying the, you know, beautiful Saturday morning here in Texas, doing a live session, getting some questions answered. Recording of this session will be uploaded, and I will see you guys at a later time. It was so great seeing y'all people. Cheers, everyone. You'll have a great rest of the weekend. Peace.